Marc Leemans is an analyst at Banque Degroof and joins us now live from Brussels. Good morning. Any change in the rating as a result of what we've seen this morning?
No, nothing really. I mean, there was a diverging trend between below the EBIT line and above the EBIT line, and net, well, we're basically flat in our numbers.
Yeah, a slight EBITDA miss. Is that anything to be really concerned about?
Nothing really. It was Brazil mainly due to, well, weak weather in the first month of the quarter, and then also marketing expenses and distribution expenses mainly due to higher fuel costs, etc. But nothing to really be concerned about longer term.
Bud Light Platinum did well, but you look at the figures and you look at the weather and you wonder whether you've seen some of the Q1 demand being stolen from Q2.
That is a possibility, but I mean, in the whole scheme of things, Bud Light Platinum is still relatively small, so I wouldn't look too much at this, well, let's say 1% or so. But in the second quarter, they have already guided for somewhat lower shipments, so I think that is what has been priced in today.
Okay. Look, revenue is growing. Revenue is growing faster than volume. Therefore, they're improving the mix. They're improving pricing. How much more potential is there to do that?
Well, if you look at, for instance, Brazil, where their EBITDA margin is in some quarters in excess of 45%. I mean, there are a lot of markets where they don't have that kind of EBITDA margins, and I think there is still a lot to go. These guys are really going for value, not for volume, and they're pushing out all the low value brands and low value volume out of it to achieve higher margins and higher prices, actually, higher mix.
Is this the stock to own rather than, say, SAB Miller or Heineken? How does it compare with its peer group?
Well, they're roughly trading in line on most multiples, but I prefer AB InBev due to its geographic exposure. The geographic mix is really one of the best in the brewing universe. So, and they're expanding in the right markets, putting their money in the right places. So this is, I think, one of the names to own.
It's interesting you bring up the multiples. I was running through some of the multiples and the ratios earlier on, and the EV, enterprise value EBIT line ratio, they look to trade on quite a significant premium. If you look at the growth line, maybe it doesn't justify that. Are there a few anomalies here?
I haven't looked at, well, normally speaking, people look in first instance at EV/EBITDA. I don't know, are you looking at consensus numbers or this?
I was running through some of the consensus numbers. It's not a big issue. I'm just trying to sort of pick out why I would own one stock over another stock in the sector. Look at the PEs; they all look fairly similar. SAB Miller, exactly. I think, trades on a slight premium. But I'm just trying to sort of pick out why I would own this stock rather than owning, say, SAB Miller or the great numbers we saw from Heineken. Why AB InBev?
Yeah, exactly. Well, they're market leader in most of the important beer pools. So they're basically setting prices in let's say Brazil, where they have a 70% market share. They're basically doing the same in the US. It's a very consolidated industry, and players are really rational. Why AB InBev as opposed to, let's say, Heineken? Well, their geographic exposure is more towards these growing markets like Brazil. They have a very big business in Brazil, which is 40% of their business. Also in China, they're more exposed to China than other markets, and they're also doing acquisitions in countries where GDP per capita is growing, right, and or you have a rising population.
Just to wrap it up, this is a sector with a reasonably strong defensive quality. If you start to see equity markets turning lower, and we have started to see that in the European space, should I just buy the basket? Is it just sensible to say, you know what, don't worry about the individual businesses, buy a basket of these things. It's a good hedge against the equity markets going lower.
I would prefer stock picking. Like, well, if you look at another one, let's say Carlsberg, with a lot of exposure to Russia and Ukraine, that market is really suffering due to a number of factors. But I would prefer stock picking, and then SAB and AB InBev are the ones I would look at.
Marc, thank you for running us through the figures, and thank you for giving us a take on how we should trade this one. Marc Leemans joining us from Degroof.